Alrighty, let's get this thing going. Thanks everyone for joining today. And a welcome to you all. Hope you enjoyed your long weekend. My name is Marcus Ward. I'm the head of data and analytics at Precise Business Solutions, and I will be presenting to today's topic. Just to give you a bit of background on me, I've had a very data-focused career spanning 25 plus years now, skewed heavily towards delivering outcomes in the BI and data warehousing space. And I've worked with a variety of businesses throughout that time, both big and small, in just about every capacity from consultant, developer, solution architect through to team lead and departmental head. I loved it all, thoroughly enjoyed it. So that's me, and that leads us to today's topic, RFR, or Rapid Financial Reporting Solution. So what we're going to cover today, we've broken it into two broad areas, solution architecture and showcasing of the reports, which I suppose is the meat and potatoes of it all. Within the overview, I'm just going to roughly introduce the product and give a bit of background, run you through the solution architecture, the data model, and some of the other collateral we've got. And within the showcase, I'm going to cover the main financial statements we do, which is the P&L, the balance sheet, and the cash flow, and the permeations therein. So straight off, what is RFR? So I'm absolutely thrilled to be introducing this product today. At Precise, we're really excited about it. We call it RFR, which stands for Rapid Financial Reports. And it's an out-of-the-box or turnkey solution, for lack of a better phrase, which provides core financial reports. So what does this mean? It's a minimal configuration setup, maximum value output offering. Or put another way, bang for your effort. And while it's designed to scale with your complex requirements, at its heart, it is built to answer the basic questions with ease. Things like your cost center reports, departmental financial statements, and cash flow statements by entity. Now that may sound pretty boring, but to those of you for whom financial data matters, it's actually really important. Not having accurate, quality financial information at hand in those critical first few months post-go live can be problematic, akin to having leadership blinkers on at a time when your company is most vulnerable. And sadly, we've observed this pain point for some of our customers. That made it a problem for us. And so we responded because we believe having this data at that critical juncture is crucial. And this product, RFR, bridges that gap. So I'm pleased to say, I'm actually proud to say we released our first production version in December 2024. And it was well received in the market. And since then, we had some learnings and have made a couple of minor releases. But now in June 2025, we have a robust high-value solution. So what is it? It produces the profit and loss balance sheets and, importantly, the cash flow statement, allowing slicing and combining company, book, department, or any other predefined profit center or cost center or account segment. Leveraging Epicor's APIs, the solution is truly tech agnostic, meaning you can overlay your tool of choice, be it Power BI, Tableau, Click, or even just Excel. And all of it is priced for a song. Solution architecture. The solution comprises a set of BAQs loaded to your Epicor instance. A template Power BI report incorporating the iterative calls to the Epicor APIs, along with a raft of DAX measures and derived tables to support the financial reporting. We can set the report within the web service to be auto-refreshed. New reports can be built off that data model that we give you and then redeployed to the web space and shared, keeping the business logic centralized and preserved so that you only have that one version of truth. However, external reporting tools can still access that Power BI data model or even the report itself and extend it. This makes the solution truly tech agnostic at heart. And more so, even circumventing the Power BI data model, the solution can go straight to the REST APIs making it 100% tech agnostic. So let's talk about the data model. All right, within the first release, or within just the standard release of what we built, we have the DIM GL book, DIM fiscal period, and DIM GL account, which captures the bulk of the financial attributes you're going to want to slice on. We had two facts tables. There was a facts GL period actuals and the fact GL period budget. A lot of clients don't necessarily leverage the budget table straight up, and even if they've got external budgeting solutions, they will potentially also import that back into the budget table so you can actually get the most out of these Power BI reports direct from Epicor. But beyond this basic schema we've got here, the heart and soul, I suppose, of the solution we've got is the DIM report. Now, this is the derived table, the derived dimension that we build working with you. And it's where we implement things like the custom heading, the custom groups, the calculated members like gross profit and GP percentage. Essentially, what you want your reports to look like. And then finally, we've got the report bridge, which is a quasi-facts table that implements the necessary grouping logic to tie a DIM report to your DIM GL account. So what other collateral have we got? Well, on the master data front, as well as having a pro forma category structure provided in the documentation, we tend to work with you from the get-go to ensure your chosen categories are implemented effectively. And by that, I mean easily to accommodate your financial reporting. This becomes especially important when you have multi-companies, because whilst you can actually group things on collections of account codes and the like, what can start off as a very conformed structure, once you go multi-company, people can start making account codes that don't quite conform to what they are, and things can become a mess fast. So effective financial categories are worth their weight in gold. But even at a company level, you don't have to adopt our best practices. We provide a full category structure, what's recommended. But it is important that you provide sufficient granularity and are able to delineate certain key things. For example, in the worst case, if your solution just has three categories like assets, liabilities, and equity, it makes it very, very hard for you to scale your reporting solutions. There are key categories like, what are your trade debtors, what are your trade creditors, and the cash accounts, etc., across all of your entities, that it just makes it very, very convenient to have as a category. And on the documentation front, we have ensured the solution is fully documented, including the API access from scratch, M code in the back end, financial category structures, and their links to the reports, and a full data dictionary for all objects, and a full listing out of all the DAX measures we use with their DAX definitions. Okay, so the heart and soul. What do these reports look like? Okay, so let's start by dropping a matrix visual onto the report canvas. We're going to go ahead and drag the report attributes you can see on the right-hand side from the DIM report dimension, which was that one I spoke to you about that we define and customize according to your requirements. And you can see straight away that you've got this extra member on the matrix, cash flow. As opposed to if you'd have dragged the GL statement from the DIM account on, you'd just see balance sheet and profit and loss. Now we're going to go ahead and drag the level 1 attribute from the same dimension. And again, you'll see a whole pile of extra values that wouldn't be there if you were dragging categories on from DIM GL accounts. Some map directly to the financial category, ideally, and others are calculated members that are brought into existence in this dimension solely for the purpose of reporting. Things like your net assets or total liabilities and total assets, if you don't actually have those categories set up, if you go to non-current and current. So let's drag on amounts so you can start seeing some numbers. The first thing you're going to note here is these numbers look very different to what you'd see if you dragged a standard amount onto a matrix coming from DIM GL account, namely them being mutually exclusive and summing to zero, pretty much just a reordering of the trial balance. Here, however, we have got repeated numbers calculated values, and flipped signs. So things are starting to look pretty much like you'd expect to see on reports. So from here, we're going to dive into each of these reports and just filter as we go. Let's look at profit and loss. You'll notice across the top a set of slices: financial year, financial period, and number format. We tend to put these filters on top of most of the reports we do, unless screen real estate is at a premium, and then we put those filters into the sidebar filters. I find it a lot easier to use these filters, but again, it depends on the client as to how much they need that space. Now, also, you've got these 13 columns across the page. Now, you could keep the amount value that we had on the previous page on the report, and you could pivot that by financial period to get the columns. What we've got here is a separate measure for each column: P1, P2, P3, for all 12 of the months you see, and then ultimately a year-to-date column. And we do this because depending on the report that you're running, the filters that you select do not necessarily mean that is the period or the only period that we want to see data for on the page. In here, for example, we've selected June, but we still want to see all the periods prior to June. And as we move forward and look at the balance sheet and the cash flow, these rules just further intensify. But pausing here, we can see that while this is showing level 1 from DIM report, a common question we get is, can you drop attributes from another dimension as well? And the answer to that is yes. So looking here, what we've done is where you see the red circles, you can see product 1 sales, product 2 sales, product 3 sales. These are actually general ledger accounts that we've dragged on straight from DIM GL account. And that takes us down to that next level of detail. And this is great, but sometimes we have a situation where you might have, say, 50 sales GL accounts. Now, this is too many for a report like this. So you might have a natural grouping like region, for example, which might come down to half a dozen to a dozen regions, which is a much more an appropriate number for a report like this. Now, this is a scenario where you'd map those regions to a level 2 in your DIM reports. And that way, when you drop level 2 onto here, you will see region for your revenue and your cost of goods sold accounts. But down where you've got, you say, your operating expenses, you can provide a different grouping, like splitting between fixed and variable expenses. So you've got that flexibility to really customize what your levels look like, which to me just makes things really user-friendly when a novice Power BI reporter jumps on and starts playing, dragging and dropping attributes on the reports. This is the same report you're seeing here, but notice it's got gross profit percentage on it. And it's important to note that it's formatted as a percentage, while the measure itself on each of the columns is formatted as a number on the rows. So again, this is just a DAX formula that relies on what member is showing on the row to give that format. And that's all included as part of the report. Now, there are many report formats we can play with depending on your requirements. Here, for example, is the same as the previous, only we've just grouped it quarterly. And likewise, quarterly report showing the extra detail. But you'll notice so far, all we've looked at really is just the actuals. So when we introduce budgets, we get a raft of other permutations that exist in the P&L space. So let's just jump and have a look at a few of those. So this is a quarterly profit and loss giving actual budget variance analysis. And we could just as easily change this to a this year, last year variance analysis by quarter. Again, the sky's the limit, but this is meant just to provide you with some examples of some of the things we can do. And in terms of formatting the columns, really the sky is the limit. Likewise, in this report, we're performing a budget variance analysis on current month, year to date, and full year projection, we could again just as easily change budgets to last year actuals for the variance analysis. So I'll leave it there with the P&Ls, but let's move over and have a look at balance sheet, what they look like. So balance sheets are interesting because traditionally you just see a balance for a given period, and that's fine. After all, it is called a balance sheet. Transactions can get buried in these accounts. They can and they do. So I also like to show balance sheet movement reports as well. It's much easier for analysis. So here, what you can see is the top report is showing movements, whereas the bottom is showing the traditional balance per period. So you see in that top report, you've got an open balance, and for each of the months, up to wherever you click on the filter, it will just show you the movement, and then it will give you the year-to-date movement of those accounts, followed by the closing balance, which actually gives you your true balance sheet balance. Whereas the bottom one, every single one of those 12 months just shows you the running balance on the account. So you can see on the top, if there are certain expenses, for example, that happen to get buried in asset accounts, you can much easily see where they might be popping up, especially if you drill down to one level more detail of what's going on. Same thing again, but just with a quarterly format. And here we're dropping the next level of detail on the movement balance sheet, and likewise with the traditional balance sheet. Here again, the extra detail for the quarterly version and the quarterly balance version. So more of the same. And so finally, we're at cash flow. Traditionally, the trickiest one of them all to produce correctly. We use the indirect method here, which seems to be widely preferred as it ties in nicely to the other two statements, or more reconcilably. Namely, we start with net profit and we adjust for the non-cash items and movements in working capital accounts. So in this format, what we're doing is just showing you the flows of cash in all the months. And you'll see down the bottom where you've got cash at start of period, cash at end of period. Obviously, they're balance accounts, whereas everything above those two is to show movements. But all the way to the right, if you want to see the start and finish for the entire period with the year-to-date movements, that's what you're seeing there. And with the same, but this has just got the quarterly delineation. Once again, with the cash flow, although it's not as important as, say, with the profit and loss, you can drag on further account delineation or second level groupings if you really want to see that, although quite often with cash flow, it's not as demanded. But it should be noted that just as we can apply row-based formatting for a measure like the percentage sign for a gross profit percentage when the rest of the column is in dollars, we can also provide highlighting or number formatting on rows where you want them to stand out. And all of this can be built into the dim report dimension. And because obviously you look at this and some of those rows are clearly what you'd like to have as subtotal rows, even though they are just calculated members at the same level. So it just makes for the readability. Also, there are numerous other report formats available. And look, I haven't even gone down the highly client elastic rabbit hole of showing the graphical visual representations of the financial metrics that we have available. But there are loads of them and they are really cool. On that note, I'm going to call it though, as I want to keep this session short and sharp. But the intent here is if any of you would like a more in-depth or interactive one-on-one showcase, just ping us after the session and we'll arrange something pretty soon. So on that, are there any questions? Okay, So I've got a question come through here. What does it cost? Um, it's a bit hard to put a number. What I can tell you is, from my perspective, it is pocket change, as usually the dollars charged for it well and truly cover the required finance consultant's time to come out and help you with your chart of accounts and category structure. But if you're chasing an exact number, I would urge you to speak to your CAM and he can put you onto that. But I can tell you it is very inexpensive compared to other comparable options in the market. Anything else? Hey, all right. How fast to implement? So ordinarily, if this is purchased as part of your ERP rollout, it would be implemented day one. But if you implement it after the fact, it takes only as long as is required for one of our finance consultants to sit down with your accountants and set up your financial categories appropriate for the reports to work. Um, There's probably about a two-hour deployments process, and it all depends on what kind of network security you guys have running. But aside from that, it's plug and play on the day. Any other questions? Okay, I'm going to take that as a no. So, oh, hang on. Oh, I've got one more. So, is the data live? Absolutely. It is live to the extent of when you made your last call to the APIs. So the APIs pull data from Epicor with zero latency. So as soon as you make that call, you are looking at fresh data. Within Power BI, you can refresh the report model against the APIs based on a schedule that you define. I think with the standard pro license, you can automate 8 of those a day. With premium, I think you can have vastly more, if not unlimited. Because of the size of the tables we're hitting here, which are not huge, it means we can actually run refreshes very regularly, and the refresh does not take long. And you can also do ad hoc refreshes if you've just posted a transaction and you don't want to wait another 10 minutes. So it is what I'd call quasi-live, but to all intents and purposes, it is live. Thank you. Okay, we are interested. How do we find out more? So best thing to do is to ping myself after the session. And we can arrange a catch up. I can actually showcase the solution with the cam, and we can have a chat with you about what the cost is, and I can show you exactly what you're going to get, and you can get an idea of how quickly it can be implemented at your site. And from there, we can even put you in touch with all of the other documentation we have as part of the product, so you can at least see what we've got. I think that's probably the best way to find it out. Anything else? All right, I'm getting nothing else in the chat, so I'm going to